Ladies and gentlemen, Gaken here. Welcome to the daily update. Hope you guys had a good day trading today. Market is up 0.3% there on the S&P. Nasdaq is up 1%. Semiconductor led the entire market today with a 2.5% positive. However, we got Dow, small caps, transport, banks, energy, and biotech all printing red numbers. They're down a little bit, not a whole lot, about 0.5% each. Same with the healthcare, pretty much flat. Home builders are up a little bit. Utilities down 0.5%. Retail made a move, about 2% positive. Emerging market got hit, 1.2% negative there. Bitcoin looks like down 4%. Gold is slightly down. Silver down. Miners down. Dollar down. Oil up. Treasury bond up a little bit. VIX is up slightly there. Let's stay with the S&P 500 ETF. Spider, 65-minute chart here. So there's a little bit of shenanigan that we saw today. This is where we get. This is where we closed yesterday, and this is where it opened today. We actually gapped up, and then out of nowhere, we see this fluctuation here. This market just straight went to in tankage mode on the first hour after gapping up. You see that's a long candle there. I mean, just think about this. The size of this gap is equivalent to like 2 days of 3 days of move. Just sheer size of the length of it, right? It's a big candle there, kind of rattling people, kind of, imputing a little bit of micro-term pivot. This is why we have to understand the big picture, right? So should there be any kind of shenanigans, should there be any kind of micro-term fluctuation such as prices that we've seen the first hour of today's move, we want to give benefit of the doubt because the overall trend is up, which we've been establishing that fact this week, right? The trend is up overall, but this is a level that, we're anticipating some kind of shenanigan, and nobody knows how the shenanigans play out, but this is how we played out this morning. And then we saw a little bit of tweezer bottoming action there, and then you see that second hour move. With that second hour move, pretty much recovered all the losses, but that move alone isn't a whole lot. But the key ingredient, the why this market settled down towards the end of the rest of this day after the first hour shenanigan was the third hour follow through. You see, this is why follow through is very, very important, because for 1 hour of move, because that's that first 2 hours move. This is just all shenanigan, right? Shenanigan downturn, shenanigan upturn. Nobody knows how this is going to play out. But once we saw that third hour follow through, then the market settled down, right? Market got calm. And then after that third hour move here, what happened was we've established the fact the market realized, okay, that's your pivot right there. And that's your secondary pivot, right? We can all see that these are the pivot, right? This is prior support, resistance. And that's a resistance because we gapped up right at that level and just tanked, right? And then after third hour, reclaiming that level, and you can see how price continuing to respect that level. There are some fluctuations on the fourth hour and fifth hour. You can see that by that long lower wick here, it didn't go any lower than 468.59. As you can see here, why? That's been acting as a resistance entire day yesterday, right? So that's a prior resistance acting as new support. So 469.19 and 468.59, those two levels were acting as micro-term supports for entire day. And the way the market settled down on the fourth hour and fifth hour, sixth hour is because of this guy. Is because of that, that third hour follow through move, right? Once we saw that follow through move, everybody's like, okay, all right, fine. Okay, there was some shenanigan on the first hour. Their tankage happened on the first hour. We recovered on the second hour, and then third hour follow through. All right, and bears, short-term bears, micro-term bears, they're basically, okay, we give up. And then there's no more volatility. And then every short-term decline was bought up. That's what we saw on the fourth and fifth hour. And the sixth hour, we just hung around there a little bit. above 469.19. We want to continue to give benefit of the doubt to the buyers. If we can actually hold above 469.19, 469.19, right? And 468.59. First 2 hours of tomorrow morning's price action, right? And we cannot see like a red, full-blown red candle. We could see like lower wick, but if we can stay up, what we need to stay up above though is here. You need to stay above this resistance right here, right? So what the candle they need to look like is something like this. That doesn't look like, okay, here, let me do this again. Something like that, right? And then something like that. We could, I mean, it's okay to see lower wick. It's okay to see lower wick like that. But if we can stay up above 469, let's see here, let's double check, 469.76. And if we can stay above like a 470 first 2 hours, there's great chance we're going to see a rally tomorrow or maybe on Monday. And the market is ready to kind of continue to print new all-time highs, right? We see weakness, we see gap down, we see price getting below 468.59. Well, then I think more hecticness is going to come. Could be a little bit, could be more shenanigan coming next week. So I think tomorrow is going to be a key important day, how this market plays out next week and the remainder of this month. So let's check out that oscillator and see if you can extract any more information. So oscillator actually crossed back up here. So you can see yesterday, it looked like it was falling over, and it was. Despite the fact that we did see that first hour red candle, oscillator is not even accounting for any of that. Oscillators are really giving a lot of respect to this follow through on the second and third hour. And with that, we finally saw that cross. And that's a premature cross. You can see we're not at the bottom of his band. We're in the middle of his band. What this signifies, if, only if we can see a follow through tomorrow or early Monday, this signifies that market is ready to resume with this uptrend, this momentum we've been in the last several trading sessions, right? But the market must see a strength holding above 469 or so and have to close the day tomorrow with a positive note, right? Because if this thing keeps going up like this, let's say at the end of the day tomorrow, this thing looks pretty bright like this, that's a good sign for going into next week. But let's say at the end of the day tomorrow, this thing's starting to look something like this, could be problem for the next week that is coming, right? So I'm going to come back for you, but I'm going to come back for you tomorrow, right? What I'm going to do is I'm going to revive the weekly update, right here. And so every Friday, I'm going to be analyzing S&P, if I have time NASDAQ, but mostly S&P, gold, and we used to do this. Remember you guys remember this? And there won't be any 65-minute chart analysis, but there will be daily. We're going to flip to daily chart, and we're going to look at the big picture of this market, right? This market, after COVID lows in March of 2020, been in this raising bull market, right? This entire year, S&P did not see a real correction. When I see real correction, 8 to 10% or more, right? The most we've ever gotten this year on the S&P is like 6% or so, right? 6% correction. That's not really a correction. That's just a normal fluctuations in the primary time. And we didn't see a real correction this entire year. S&P is performing about 25% or so. Semiconductors almost 40% after a monster year last year. NASDAQ is like close like 28 or so, potentially get them 30%, right? And so what we're going to try to figure out on this weekly update analysis, we're going to try to figure out, okay, we had a good year last year and this year, right? Can this momentum continue? Can we see this market finishing the year strong? And that's what we're going to talk about. Again, we're going to talk about on these weekly update analysis, we're going to talk about S&P, the long-term picture, big picture. We're going to flip to daily chart. If we have time, NASDAQ. If not, it's gonna just stick with the S&P spider. We're gonna look at gold and we're gonna look at Bitcoin, right? Those are what we used to do on the weekly update video. And those are gonna be all daily chart, looking at a big picture of things. And obviously, man, Monday through Thursday, we'll be continuing to do this 65-minute chart, action-packed daily analysis, Monday through Thursday. But Friday, we ought to look at this market, a big picture of things, just because this market has been in this raising bull market the last couple of years. And we need to understand how this market is gonna close, ending this year, and how this market is gonna behave next year, right? And that's all coming up tomorrow. I'll come back for you. Enjoy your evening and good luck trading tomorrow.